Hello everyone, warm welcome to Supercoaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in the next session, that is the Financial Stability Report Part 4. So we are left with only one chapter, that is chapter 3. So firstly we'll complete our chapter 3 and then we will be moving ahead, and today we will be discussing ample of MCQs based on the same report. So this session is going to be a really very important session because I'll give you a quick revision of all the first three parts. Then we'll discuss the fourth part. That means we'll discuss in detail the third chapter, which is really very important. And after going through with the third chapter, you will understand the importance of finance current affairs session, which you are going on regular basis. And after completing the chapter 3, we'll discuss the MCQs based on the entire financial stability report, which will help you to understand that what kind of questions will be asked and how well we have prepared the financial stability report that we can answer all those questions, not only here but in the examination as well. Remember me guys, questions to pakka aayenge hi aayenge. From financial stability report you cannot say that examiner is not going to ask a question, that is impossible. अब देखना ये क्वेश्चन पूछेगा या फेज 2 में और किस डेप्थ में जाकर एग्जामिनर इस क्वेश्चन को पुट अप करेगा, उन सारी चीजों को देखना रहेगा हमारे एग्जामिनेशन में. बट डोंट वरी, आई एम मेकिंग यू प्रिपेयर अप टू द ऑटमोस्ट लेवल. अब आरबीआई एग्जामिनेशन में कैसा भी क्वेश्चन पूछे फ्रॉम फाइनेंशियल स्टेबिलिटी रिपोर्ट, इफ यू हैव गॉन थ्रू विद ऑल द 4 videos and you have read the PDF at least thrice before going for the examination, I can assure you, you will be in a position to answer all the questions. अगर किसी ने अभी तक पहले 3 parts attend नहीं किए, I'll ask my team, I'll request my team to please pin the link of previous 3 sessions in the description below so that you can go through with the 3 previous sessions, and even I'll request my team to frame a playlist on the financial stability report so that you can watch the entire 4 sessions. If you want to download the PDF, it will be available on the Telegram channel which is shown on the screen, which is Economics by Madhav Arora. So we have discussed already what is a financial stability report. So it is a bi-annual report which is presented every 6 months. So last report was presented in December and now it has been presented in July. Then we talked about the key component. It possesses 3 chapters: global and domestic economic outlook. That means what is the status of global economy and domestic economy. Then we have discussed the bank, NBFCs, insurance and pension sector, how well they are performing, how well they will perform during the stress period under the stress test results. Then if we talk about the next part, the next part is going to be your chapter 3, and in chapter 3 we will be discussing the initiatives which are recently taken by the government, initiatives which are recently taken by the regulatory bodies in order to support the economy. So chapter 1 was all about global and domestic economy outlook. That means how well the economy is performing globally as well as domestic economy. Then in chapter 2 we talked about the current result of banks, NBFCs, as well as insurance sector, pension sector, that how well they are performing and how they are going to perform during the stress test as well, or during the stress period as well. So after covering the chapter 2, we have covered scheduled commercial banks, we have covered in detail urban cooperative banks, we have covered in detail the results related to the NBFCs as well. But today we have to start our discussion from a term, that is interconnectedness in the financial sector. So those who have attended the previous session, they must be aware that interconnectedness in the financial sector is the topic. Yes, Kirti, we are left with annual report. Most probably, positively, is Sunday ko I will be taking a 3 or 4 hour session in which I will be completing the entire annual report. So nothing to worry. Is it fine? Is it fine? Okay. So now let me remove my image. Let me remove the now the entire screen is visible. Screen is more important than me. So let's focus on it. Please pay attention, guys. So firstly, whenever we talk about interconnectedness, you need to understand one point very carefully. Whenever we talk about interconnectedness, in case of interconnectedness, there is a term which we call it as interconnectedness risk, or even we call it as contagion risk. हम कहते हैं ना contagious, या whenever we talk about diseases, it's a contagious disease, which means it will spread from one individual to another. In a similar manner, when we talk about a risk which spread from one institute to another, or whenever we talk about the probability that if one institute is not doing well, what is the probability that it will impact the other institute, that is basically known as contingent risk. So interconnectedness in financial sector is prone to, it is prone to contingent risk. Now the first point is, so what do you understand by the word contingent risk? So as the name suggests, financial sectors, they are interconnected to each other, and if they are interconnected to each other, that means they are prone to risk due to each other, which means agar ek bank hai, if it is not doing well, it will impact the authority, it will impact the organization from which the bank has borrowed the loan, So in that particular case, whenever we talk about interconnectedness, whenever we talk about possibility of a financial crisis spreading from one institution to another due to the financial links, is known as contingent risk. So if one large bank or NBFC collapse, it can cause stress for other connected, it can cause stress for the other financial institutes which are connected through loans, deposits, investments, payment obligations, and whatnot. So this is specially, this is specially important in a tightly interconnected systems like India's financial sector, where we have to analyze the interconnectedness in the financial sector pretty well. So if I talk about the financial institutes, so they are the nodes. For example, we have banks, we have NBFCs, we have mutual fund companies, we have insurance companies. They are nodes, and these nodes, they are connected through loan, maybe deposit, maybe investment, maybe surplus fund parking. For example, if bank 1 has given loan to NBFC, NBFC has invested that amount in the insurance company, and insurance company has further parked those funds in bank 2 as a deposit. So this is how we call it as interconnectedness. So we have links, bilateral exposures like loans, investments, deposits connecting these institutions, and purpose of link is improve funding. Why these links are there? So that funding can be improved, liquidity and risk sharing can be witnessed, but in order to avoid, or in order to manage your liquidity, in order to improve your funding, it will result in spread risk situation, especially during the crisis, which I am trying to say. याद करो COVID-19, तो COVID-19 में क्या हुआ था? So COVID-19 में बड़ा ही सिंपल सा फॉर्मल पॉइंट था, इट वॉज अ कंटेंजियस डिजीज. तो एक इंडिविजुअल का अगर COVID-19 हुआ, इट वॉज वेरी इजिली passing on to the another, because we were socially very well connected. अब family में तो pass on होगा ही, फिर offices में तो pass on होगा ही. In a similar manner, if one bank is not doing well, which is very well connected with the NBFCs with the help of loan, investment, or something like that, if there is a financial crisis, if there is a crisis, if the bank 1 is not doing well, it will spread to NBFC. From NBFC, it may spread to insurance company. From insurance company, it may spread to bank 2. And in this manner, the entire financial sector will be impacted. And that is basically known as contingent risk. समझ आया point? ये बहुत important है. What is contingent risk? Now, if I talk about the network exposures in the country, we have almost 229 major institutions. Growth in total exposure is 19.6% on year basis. Main type of exposure is long-term funding, loans, equity. Short-term instruments like commercial papers, certificate of deposits, and other deposits dominate. Largest fund providers are asset management companies, that is mutual fund, insurance companies, and public sector banks. And largest fund receivers are NBFCs, private banks, and housing finance companies. ये पॉइंट दोनों बहुत इंपॉर्टेंट है इस टेबल में. अगर आपसे कोई पूछे, if someone asks you name the largest fund providers in the financial sector, your answer would be mutual fund companies, insurance companies, public sector banks. And the largest fund receivers in the Indian society, in the Indian financial sector, your answer would be what? So your answer should be NBFCs, private banks, housing finance companies are the answer for the same. Now, segment wise funding structure. So NBFCs, non-housing finance companies, they are the largest net borrowers. Housing finance companies are the third largest borrowers. Insurance companies are the second largest providers. Mutual fund companies are the largest fund providers. And if I talk about all India financial institutes, they are net borrowers. They are net borrowers. These are some points which you need to remember. Interbank market highlights, it shows that share in total bank's asset is 3.4%, that is interconnectedness. Public sector bank share is greater than 50% in the interbank market. Short-term dominance is 77%. Network structure, core periphery, few banks highly connected. Top core bank, one bank in inner core and 9 in mid core. Then connectivity ratio is stable. And if I talk about the cluster coefficient, marginally increased. So as a whole, if I talk about banks, they are interconnected undoubtedly, but they are pretty strong. They are pretty in a stable position. So there is no scenario of risk at the current structure. Now, what if bank fails? So most impactful bank failure would be if a bank fails, its impact would be 3.4% of tier 1 capital, that is solvency loss. 0.3% of high quality assets or liquid assets will be lost, that is liquidity loss. If I talk about NBFCs, so maximum risk in case of NBFC fail is 2.9% to tier 1 capital, and maximum risk to housing finance company fail is 3.7%. Even largest failures, they do not cause bank defaults but reduce capital. ये क्या कह रहा है? ये कह रहा है कि अगर NBFCs की बड़ी बड़ी organizations भी fail हो जाए, all India financial institutes means I'm talking about NABARD, I'm talking about 5 institutions. One is NABARD, then we have SIDBI, we have Exim Bank, we have National Housing Bank, and we have NABFID. So these are the 5 institutes which we call it as All India Financial Institutes. I hope it is clear, Shivani. After macroeconomic shocks, if there are macroeconomic shocks, then baseline is minus 0.24%, minus 2.64% capital impact on scheduled commercial banks. Adverse case में 13.83 and in adverse scenario 2 it will be 11.70. Capital below minimum किसी भी केस में नहीं होगा. Contingent loss, that means spread of loss to all these sectors, all the financial institutes, will not happen. That shows that yes, India's financial sector is pretty strong. If I want to conclude the discussion, then my answer to this particular question or the conclusion would be Indian financial system is highly interconnected, especially via long-term funding. NBFCs and HFCs are major borrowers, while mutual funds and insurance companies are the key providers. Contingent risk exists, but stress test shows no systematic bank failures even under severe shock. So it says that कि contingent risk है, probability है, but even during the stress period, no systematic bank failure. Systematic bank failure means एक बैंक के फेल होने से दूसरा बैंक, दूसरे की वजह से तीसरा, और उसकी वजह से पूरा फाइनेंशियल सेक्टर फेल होगा. दैट पॉसिबिलिटी इज नन. Network structure is core periphery, with few banks being central in exposure web. Macro test doesn't cause spillover contingent. तो macro test कहता है कि कोई भी spillover contingent नहीं होगा, which reflects that banks they have strong capital buffers. और अगर एक बैंक लॉस हुआ, एक बैंक अगर लॉस में भी गया, उसकी वजह से बाकी बैंक्स पे कोई मेजर लॉस नहीं होगा, which shows that Indian banking sector is strong enough to survive the tough times. ठीक है जी, क्लियर हो गया पॉइंट, समझ आ गया. चल, नाउ मूविंग ऑन टू द लास्ट एंड द थर्ड चैप्टर. व्हाट डज द थर्ड चैप्टर टॉक्स अबाउट? थर्ड चैप्टर टॉक्स अबाउट दैट व्हाट आर द initiatives which have been taken in the past. What are the initiatives which have been taken in the past? इंश्योरेंस कंपनीज की अगर हम बात करें, दे आर दी, देखो जब भी कभी हम टेंशन लेंगे, हम फंड प्रोवाइडर की टेंशन नहीं लेंगे, हम फंड बोरोअर की टेंशन लेंगे. जिसने फंड्स प्रोवाइड किए अगर वो फेल हो भी गया तो उससे कोई फर्क नहीं पड़ेगा इकोनॉमी में। फर्क तब पड़ता है जब बोरोअर फेल्स। तो यहाँ पे बोरोअर्स जो लार्जेस्ट बोरोअर्स है दैट आर एनबीएफसी एंड एचएफसी, और इनके फेल होने पर बैंक्स पर कोई असर पड़ने वाला नहीं है, क्योंकि इनको जो मैक्सिमम लेंडिंग है वो बैंक से हो रही है, और इनके फेलियर पर बैंक्स आर नॉट गोइंग टू बी एक्सपोज्ड ऑफ, और they are not going to get in the category of systematic risk. That is the point. Is it clear, Satpati? If it is clear, give me yes, sir, so that I can move ahead. If borrower fails, then the insurance sector, yes, all will fail, face the risk. But in our discussion, I am focusing majorly on banks because RBI will be coming up with the question with respect to banks only. That is the reason. तो बैंक्स पे क्या असर होगा ड्यू टू देयर फेलियर, दैट आई हैव ऑलरेडी डिस्कस्ड. इंश्योरेंस सेक्टर पे क्या होगा, दैट इज नॉट मच इंपॉर्टेंट. Whenever there is a kind of loss, when NBFCs or any scenario there is a stress period, banks will witness a loss. Their capital adequacy risk, their capital adequacy ratio will fall down, but it will still be above the minimum requirement. Banks will not fail, they will witness loss, but they will not fail because of the capital they have. And if they are not failing, this failure will not be impacting the other banks in connection. If other banks are not impacted, there will be no scenario of systematic risk. I hope now it's clear. If it is clear, give me yes, sir, so that I can move ahead. Okay. Now the next point is, sir, what are the initiatives taken by regulators of the country in order to counter the risk prevailing to the financial sector, which include the initiatives taken by RBI, initiatives taken by SEBI, initiatives taken by IRDAI. So as I already said that this report is from January to June 2025, and if you have attended my current affairs session from in the past 6 months, then I'm pretty sure you will be in a position to understand all the initiatives which have been taken in the past, and I won't be discussing those initiatives in detail because we have already discussed them in our finance current affairs session. So global financial system faces challenges from trade tensions, cyber threats, and climate related risk. Obviously, in response, global regulators are working to build systematic resilience through strengthened Basel norms, improved liquidity management, enhanced cybersecurity, comprehensive climate risk framework. So this is very important, that what all risks are prevailing in the global financial system. If you want to write a descriptive answer, you can include these discussions. So global financial system faces trade tensions, cyber threats, and climate related risk. If I talk about domestically, regulators, they are aligned with these efforts. Which efforts? So the efforts of building systematic resilience through Basel standards, through improved liquidity management, by enhancing cyber security and comprehensive climate risk framework. तो उस केस में इंडिया में RBI, SEBI, they are trying their level best to counter all kind of risk which are prevailing in the financial sector. So in response to growing economic uncertainty and structural shift in the global financial landscape, regulators, they are remained committed to enhance resilience of the global financial system. Policymakers and global standard setting bodies, they are advancing measures to strengthen the system resilience to complex securitization structures. So financial stability report, several regulatory initiatives have been undertaken in the past, which I will be discussing with you. And once I'll discuss the names, you will realize yourself that most of these initiatives have been discussed in the past few classes itself. So please pay attention, guys. If you talk about the first one, use of Indian rupee for cross-border settlement, this initiative we have discussed in order to decrease the forex risk, in order to decrease the dependency on foreign currency. This initiative has been taken by RBI, which we have discussed in detail. Then prevention of financial and digital payment frauds. Then Reserve Bank project finance. We have discussed this in almost 2 hours session where we talked about project finance. We talked about how project financing is done, what is the process of project financing, what are the conditions, what are the criterias. We have discussed that. Then we talked about the amendments which have been done with liquidity coverage ratio. Liquidity coverage ratio is nothing but it is a ratio of high quality liquid asset of the bank divided by net outflow expected in 30 days during the stress period, and this ratio is need to be greater than 100%. But in case of high quality asset, there are certain criteria which have been revised, and we have discussed this again in detail. Then we have discussed already Reserve Bank of India's digital lending directions. We have discussed this direction of RBI, that is forward contract and government securities. Then we talked about introduction of specialized investment funds, introduction of mutual fund light framework. Then we have also talked about SEBI's initiative of safer participation of retail investors in the algorithmic or in the algo-based trading. Then SEBI has also taken up initiatives regarding the unclaimed assets, like RBI has taken many initiatives in order to increase the recovery of unclaimed deposits, system audit of stock brokers through technology based measures. And recently also, yes, in the yesterday's class we have talked about a new forum which has been set up by SEBI, where all the stockbrokers, they will be submitting their report at once in order to avoid the duplication effort done by the stockbrokers. Then we talked about intraday monitoring. We talked about changes to disclosure requirements. So these are some of the changes, initiatives which are taken by SEBI and other regulatory bodies. But if I talk about these top 6, these are taken by RBI. So top 6, all of them have been done, and in bottom 9 we have done 7 out of 9 in our finance current affairs session itself. So those who are joining this session from January onwards, they know that we have discussed it. And if you want to understand these initiatives, you can go and watch the sessions which are available on the YouTube itself. ठीक है जी, clear हो गया? Any doubt till this point? Any doubt till this point? If you have any doubt, you may ask, please. Coming Sunday, we will be completing left out parts of annual report as well. Don't worry. ठीक है जी, चलो. So then we have the developments which have been witnessed in the other areas. For example, consumer protection. So RBI ombudsman complaint have been disposed of, has been resolved. Security market compliance have been filled up. Online dispute resolutions has been done. Then enforcement, RBI actions, SEBI actions have been enforced in the past. SEBI actions have been enforced in the past. I have shared the data with you. Then deposit insurance. What is the deposit insurance coverage? As of March 31st, 2025, 97.6% of 293.7 crore deposit accounts were fully insured. Only 41.5% deposit value was insured. Premium collection by DICGC was 26,764 crores in the financial year 2024-25, and commercial banks contributing 94.7% of the total premium. I hope you understand. Whenever DICGC offer insurance services against the deposits, insurance services against the deposits, of scheduled commercial banks, then the banks they are responsible to pay. Banks they are responsible to pay a premium, and if I talk about the premium value collection, this has been mentioned on the screen. So this is very important data which you need to go through, and there is a great probability that question can be asked from it in the examination itself. Next is corporate insolvency resolution process. So overall stats since 2016, 8308 corporate insolvency resolution process initiated, 36382 closed, and 1926 are still going on. Resolution efficiency, so creditors they have recorded 3.89 lakh crore under the resolution plan. If you remember, the same data was shared in the previous session when we were talking about a reply given by Union Minister of State for Finance. Liquidation has been done and process timelines have been also mentioned. This is important. Process timelines are average time for resolution is around 597 days and for liquidation is around 508 days. Then developments in the gift city. Growth metrics, 865 entities registered by March 2025. 229 229 alternative investment funds launched a corpus value of $50 billion. Debt securities listed around $63.7 billion. Banking assets has grown from $14 billion to $88.7 billion. If I talk about gold imports, 101 tons. Silver import is 1148 tons, which has been done. And last is your pension funds. Growth and in subscribers is 14.2%, which is important. Asset allocation primarily in government security, this is important. And new schemes like Unified Pension Scheme introduced under NPS in January 2025. This information is important, rest you can ignore. Last one which you were looking forward for, Sibananda, regarding the insurance sector. So this is the entire discussion on insurance sector. If you pay attention on the screen, you will be able to understand. Insurance sector, if I talk about life insurance, total premium collected by life insurance companies is 8.7 lakh crores. New business premium is 4 lakh crores. General and health insurance, total premium collected by general and health insurance is 3.1 lakh crore, which is up by 6.2%, and health insurance segment has witnessed a growth of 9%. Regulatory developments have been done. Three earlier regulations of 2012, 15 and 20 have improved and led to mandate, electronic record keeping, robust security privacy, data governance framework, and board approved record maintenance policies. If I talk about the new guidelines, use of equity derivatives and Bima ASBA. What is this ASBA? Any idea, guys? Do you have the full form for this? Bima ASBA. How many of you have heard this term? Anyone? When we talk about this term, that is Bima ASBA, it is application supported by blocked account. So what is it? It is a UPI based payment system introduced by IRDAI, enabling insurance companies to block block the funds, to block the policyholder premium amount in their bank account during the underwriting process. So that is what you need to remember. Like we have ASBA, that is application supported by blocked account for IPOs. In a similar manner, now you have same for the insurance services as well. तो जब आपने insurance service के लिए apply किया, it uses one-time UPI mandate to block funds in the prospect bank account. Funds are transferred only on policy insurance. If proposal is rejected, amount is released, ensuring transparency and trust. तो अगर आपका proposal reject हो गया, funds release हो जाएंगे. If not, अच्छा, मैं बता देता हूँ ये क्या है. इसको थोड़ा डिटेल में देख लेते हैं. Let me remove my image. Bima application supported by blocked account is a UPI based, it is a UPI based payment system introduced by IRDAI, which enable the insurance companies to block the policyholder premium amount in their bank account during the underwriting process. Unlike previous system where the insurers debited the premium upfront, sometimes leading to adjustment or refund. तो ये जो new method है, that is much better. So how it is going to work? Now insurance companies, they need to offer a UPI one-time mandate to their customer at checkout to comply with IRDAI BIMA ASBA guideline. This will ensure that policyholder premium amount, they are not debited from your bank account, rather they are logged in your bank account until and unless your policy is approved or rejected. So once you approve the policy, you accept the policy, then that amount will be debited from your account and policy will be transferred on your name. And if you reject the policy, then in that particular case, that amount will be unlocked and it was in your account, it is still in your account and now you can use it. Let's take an example. Let's say there is an individual A, a prospective policyholder. He or she applies for a life insurance with a life insurance company. Unsure of whether he will be allotted the policy, he opted for BIMA ASBA instead of paying the premium upfront. So once he has applied for the insurance policy, he is not very sure that he will be getting that insurance policy or not. So he has opted for ASBA. At the time of applying, the amount of premium for which he has applied will be logged in the account. That means the amount आपके account से बाहर नहीं जाएगी. It will be logged in your account only. If this policy is allotted to you, then this amount will be debited. And if you are not allotted with the policy or you yourself reject to accept the policy, then that amount which was in your account, which is still in your account, but it was locked, now this will be unlocked. Locking और unlocking का मतलब क्या? ये amount आपके account में है, but आप use नहीं कर सकते. ये अमाउंट आपके अकाउंट में है, आप यूज नहीं कर सकते, लेकिन अनलॉक का मतलब है अमाउंट आज भी आपके अकाउंट में है, बट आप आज उस अमाउंट को यूज कर सकते हैं. ठीक है जी, क्लियर है? आई होप इट इज क्लियर. शिवानंदा, जस्ट गिव मी यस सर. उर्मिला, प्लीज गो एंड वॉच part 1 of this report where I have explained in detail what is the meaning of financial stability. दोनों ही है, इसमें दोनों ही चीजें हैं. शिवानंदा, कभी बार ऐसा भी होता है कि इंश्योरेंस कंपनीज दे कम अप विद अ पॉलिसी and they have very limited number of policies which they are planning to issue. So in that particular case, we as an individual, we apply for it and we are not very sure that whether we will be getting this policy or not. So if in a random selection we are selected, then we will get the policy, and in that case amount will be debited from the account. And if not, we are not selected, then in that particular case the amount will be unlocked and it will remain in your account so that you can utilize it. I hope now it is clear. Okay. Chalo, moving on to the next point, and the next point is I have some MCQs based on the same report. If you want to revise the entire report, this is the MCQ discussion which I have for you all, and I'm not here to judge that whether you are in a position to answer all the questions. I'm here to make you understand what kind of questions will be asked and try to listen each and every question which I will be discussing with you, so that you can answer the questions pretty well in your examination. So I have the first question for you. Which of the following statement best describes financial stability report? So which of the following statement best describe the financial stability report? It is published quarterly. No sir, this report is not published quarterly. It focuses only on banking sector. Not at all. It is a biannual report prepared by RBI and FSDC SC covering systematic risk. That is absolutely true. So answer is it's a biannual report which is prepared by RBI, which include the FSDC subcommittees. It covers banks, NBFCs, markets, payment systems and systematic risk. It also includes stress test and is forward looking. Datas are also shared. Got it guys? Moving on to the next question. The next question says, which of the following correctly reflects recent global development affecting financial stability as per June 2025 Financial Stability Report? So according to the June 2025 Financial Stability Report, which of the following is not which of the following correctly reflects the recent global developments affecting the financial stability? So in that particular case, US has reduced the tariff. No. Inflation has sharply declined in advanced economies and emerging economies. That is true, but due to the decline in inflation, it is not affecting the financial stability, rather it is promoting, it is supporting the financial stability. Global public debt has fallen below 90%. Again, it is a good call. Emerging markets are facing stagflation due to zero interest rates. That is not true. Emerging markets, they don't possess zero interest rates. So the answer is US imports tariff has increased to 15.4%, highest since 1938, which is affecting the financial stability at its most due to during the Financial Stability Report 2025. Next question. Which of the following is not considered a key risk identified in the Systematic Risk Survey May 2025? So if I talk about the Systematic Risk Survey, which of the following is not considered key risk? Cybersecurity is a key risk. Climate change is a key risk. Stock market volatility is a key risk. Geopolitical conflicts is a key risk. But food safety or food security risk, it's not a key risk. So as per the latest reports, according to this, C option is the correct answer. So key risk flagged were geopolitical risk, stock market risk, volatility, or stock market volatility, climate risk, cyber threat. Food security was not highlighted in the survey, so answer is going to be C option. Next question. Identify the correct statement related to domestic macroeconomic conditions in India. Identify the correct statement as per the chapter 1, which has presented the domestic macroeconomic conditions in India. India's growth in the financial year is projected 5.2%. No, sir. It is projected above 6%. CPI inflation fell to 2.8% in May 2025 and to 2.5% in June 2025. That is absolutely true. So B statement is correct till now. India's public debt maturity shortened in 2025. India's public debt maturity is shortened in 2025. No, sir, it has increased rather. The current account deficit widened to 3%. If I talk about current account deficit, it has not widened to 3%. Public debt maturity has increased from 10.4 to 13.2 years. Rural demand continues to weaken. No, sir, rural demand is boosting up. So the answer is only and only one. That is B statement is correct. Rest all the options are incorrect. Which of the following statement about financial market in India is false as per Financial Stability Report 2025? So according to the Financial Stability Report 2025, the equity market corrected between October 2024 to February 2025. That is correct. INR experienced volatility but strengthened in April, May, March, April 2025. That is true. क्योंकि अगर आपको याद हो मैंने बताया था कि India has witnessed depreciation as well as appreciation in these 6 months from January or December to June, and this was appreciation as well as depreciation of Indian rupees with respect to the foreign currency. CRR was increased by 100 basis point to manage inflation. No, sir, CRR was decreased by 100 basis point, which has led to the increase, which are expected to cause 2.5 lakh crores to 3 lakh crore rupees of liquidity in the market. Corporate bond issuance reached 9.9 lakh crore. That is true. 99% of corporate bonds are privately placed. That is also true. So answer to this particular question is only one statement is incorrect. You have to find out the false statement, that is C option. So C option is absolutely correct. Next, which of the following contributed most to the domestic financial stability in financial year 2024-25? So which of the following contributed most to domestic financial stability? डॉलर डेप्रिसिएशन नहीं सर, डॉलर इतना भी ज़्यादा डेप्रिशिएट नहीं हुआ, कुछ महीनों के लिए हुआ था. दैट इज़ नॉट अ वेरी बिग डील. डिक्लाइनिंग हाउस होल्ड सेविंग, अगर हाउस होल्ड सेविंग डिक्लाइन होंगी वुड इट लीड टू फाइनेंशियल स्टेबिलिटी? नो. US फेडरल पॉलिसी हाइक्स, इट हैज़ फर्स्टली तो ये हाइक हुआ नहीं था, फेडरल पॉलिसीज वर आल्सो रिड्यूस्ड, बट अगर हाइक होता भी देन आल्सो इट वुड नॉट हैव रिजल्टेड इन फाइनेंशियल स्टेबिलिटी. वॉलेटिलिटी है अगर ऑयल प्राइसेस में, दैट कुड नॉट contribute to domestic financial stability. RBI liquidity, RBI has increased the liquidity in the market through open market operation and reducing the CRR. That is correct. So answer is going to be C option. Aniket is absolutely correct. Next question. Which of the following statements are correct regarding the global macroeconomic outlook as per Financial Stability Report 2025? As per Financial Stability Report 2025. Give me the answer, everyone. So in this case, IMF projected global growth rate at 2.8% in the financial year 2025. That is absolutely true. OECD expects global GDP growth of 2.9%. That is also true. World Bank, World Bank forecasts global GDP to fall below 2.5%. ना सर, वर्ल्ड बैंक ने तो कहा था कि ग्लोबल जो ग्रोथ है दैट इज गोइंग टू बी 2.9%. Then we have global inflation is projected to fall below long term average. Inflation has remained above long term average and it is projected to remain above the long term average. So this is also wrong. US tariff has increased from 2% approximately to 15.4%. That is true. So answer is going to be A, B and E. These three statements are correct for the given question. Moving on to the next one. Identify the true statement about India's domestic macroeconomic conditions. So if I talk about India's domestic macroeconomic conditions, then I would say India's real GDP projected to grow at 6.5% in 2025-26. That is absolutely correct. CPI inflation was 2.8% in the month of May 2025. Current account surplus. Current account was not deficit. It was surplus in the quarter 4 of 2024-25 as which is 1.3% of GDP. That is again absolutely correct. Then if I talk about public debt is mostly short term and in foreign currency. No sir, public debt is mostly short term. Public debt is mostly long term and Indian rupee dominated. Strong rural and urban demand supports the India's growth. That is absolutely true. The consumption power, the private consumption of India is the major fuel of India's growth rate. So in that particular case, A, C and E are correct, but B and D statements are incorrect. Moving on to the next question. Which statement describes vulnerability in global financial market? If I talk about the vulnerability in global financial market, first one, US equities are undervalued. No sir, they are overvalued. Undervalued होते तो problem क्या थी? Second point is liquidity in US Treasury market has improved. No sir, liquidity in US Treasury market has declined. Hedge funds are using leverage, use high leverage in basis and swap trades. That is correct. So hedge funds using leverage and repos, that is absolutely correct. Basis trade has declined since 2020. No sir, basis trade has doubled since 2020. It has not declined, it has doubled since 2020. Equity risk premium is at 10-year low. Yes sir, equity risk premium is at 10-year low. So answer is going to be only two options, C and E. Rest all the statements are incorrect. Moving on to the next question. Which of the following are correct regarding India's capital flow and external buffers? Capital flow and external buffers. So the first statement we have is gross foreign direct investment remains strong. Yes sir, gross foreign direct investment was strong. It was, if I'm not wrong, around $81 billion, which is 14% year-on-year growth, which is good. Net FDI has increased due to higher repatriation. Repatriation का मतलब होता है जब फॉरेन डायरेक्ट इन्वेस्टमेंट जब इंडिया में जो आई थी अब वो इंडिया से वापस जा रही है. दैट इज नोन एज दिस return is known as repatriation. So repatriation will result in increase in FDI, नो सर, इससे तो नेट एफडीआई डिक्रीज होगा, सो बी ऑप्शन इज इनकरेक्ट. Then we have forex reserves declined as capital flows less than current account deficit. Capital flows जो है हमारे that is less than current account deficit, that is correct. तो अगर हमारा current account deficit ज़्यादा है which is not compensated through capital flow, then it will impact the forex reserve, जिससे forex reserves कम होंगे और इंडिया के कम हुए भी हैं, that is true. External indicators are weakening. No sir, external indicators are strong, they are not weakening. Capital flows at risk model shows possible outflow of 7% of GDP. No sir, it is capital. If I say capital flow at risk model shows possible outflow of 7% and 5% shock. 5% shock may trigger 5% shock may trigger 7% of outflow, may trigger 7% of outflow. So that is correct. So I'll go with A, C and E. Let's check whether it is correct. Absolutely correct. Which statement are true about Indian financial market? 9.9 lakh crore corporate bonds were issued. That is true. That is absolutely true. Capital mobilization has increased by 332.9%. That is true. 50% of corporate bonds were public issue. No, sir. 99% of corporate bonds were public issue. INR depreciated in March to April. No, sir. It has not depreciated. Rather, it has appreciated. So, Indian rupee has appreciated in the month of March and April in comparison to US dollar. So, this is also wrong. Term spread rose from 9 to 24 basis point. That is correct. So answer is A, B, E. These are the three correct options. That is correct. Moving on to the next. Which of the following reflect corporate sector performance in India? So which of the following reflect the corporate sector performance? ICR improved across manufacturing, services and IT sector. That is absolutely correct. Debt to equity ratio has been rising. No, sir. Debt to equity ratio is falling down, which is a good call. 53.6 lakh crore was total corporate bond outstanding. That is correct. External commercial borrowings. So risk from unhedged external commercial borrowing fell to 26.1% in March 2025, which was earlier 32.9%. So from 32.9%, it has fell down to 26.1%. This is true. Debt market accounted for 27.4% of capital mobilization. No. Debt market accounted for 63.5% of capital mobilization. So answer is going to be A, C and D. A, C and D are the correct answers for the given question. Next. Which statement are accurate regarding housing finances? Which statement are accurate regarding housing finances? So if I talk about the housing finances, household debt was 41.9% of GDP in December 2024. That is correct. Housing loans account for 50% of debt. No, sir. Housing loan account for 29% of debt. So this is wrong. Average debt per borrower has increased from 3.9 lakh to 4.8 lakhs. That is correct. Delinquency remains high among lower rated borrowers. That is also correct. Retail loans form 25.7% of disposable income. That is also correct. So retail loan is 25.7% of your disposable income, and the answer is A, C, D, E are the correct options. Which of these reflect the financial behavior of Indian household? So again, I have a question on Indian household. Financial wealth has increased. That is true. Majority of wealth is in stock and mutual funds. Majority of wealth is in 70% of the wealth of household is in bank account deposit, it is in insurance, and it is in pension. So it is not in Stocks or mutual funds, that is incorrect. Credit quality improved with more prime borrowers, that is true. High loan to value loans are rising, that is true. Low debt from low rated borrowers need monitoring, that is true. So answer is A, C, D, E are correct for the given option. Which of the following are true as per May 2025 systematic risk? So cyber risk is now low risk area. No, 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 sir. Cyber risk is a high risk area. Global and institutional risk has increased. That is true. 90% plus confidence, over 90% confidence in Indian financial market. That is true. 66% are confident in global financial system. 66% are less confident in global financial system, or you can say 34% are confident and 66% are not confident in the global financial system. Trade affects export sectors and shipping, that is true. So answer to this particular question is A. Sorry, A statement is incorrect. So B is correct, C is correct, E is correct. So B, C, E is the correct answer for the given question. Moving on to the next one. Which of the following are considered major global risk in 2025? So if I talk about major global risk, geopolitical conflicts, major global risk, tariff and hikes, major global risk, climate risk, major global risk, disinflation in advanced economies. Disinflation in advanced economies are not major global risk because disinflation is losing momentum but not a standalone threat. So इससे just आपका momentum lose होगा. Cyber security threat is correct. So A, B, C, E is correct. D option is incorrect. Disinflation से global risk generate होगा, that is not expected. Next, which of the following are considered major global risk in India? अच्छा same हो गया, sorry. Okay, moving on to the next point. What does the next point says? The next point says which of the following is or are true regarding scheduled commercial banks in the financial year 2024-25. So in the financial year 2024-25, scheduled commercial banks showed weak capital buffers. No, sir, they have shown strong capital buffers. Asset quality has improved for scheduled commercial banks. Bank credit growth slowed but aligned better with deposit growth. That is true. Stress test revealed high vulnerability. No, stress test says banking sector is strong enough. Scheduled commercial banks saw declining profitability despite increased credit. No, their profitability is increasing. So answer is only one statement. C option is correct. So scheduled commercial bank, they have remained resilient. Although credit growth slowed, it became more aligned with deposit growth. Asset quality has improved. Stress test indicated banks are well prepared to adverse conditions. So answer is only and only C option. Moving on to the next question. Regarding the sectoral credit trend in financial year 2024-25, which statement are correct? Personal loans remain major driver of credit growth. Personal loans, yes, this statement is true. Personal loans remained a strong driver of credit, that is true. Industrial sector credit witnessed highest growth rate. No, sir, it has witnessed moderate growth. Services sector credit showed marginal decline. No, sir, service sector has been stable. Agriculture credit fell sharply. No. Credit to NBFC decreased significantly. No. So only one A statement is correct. Rest all the statements are incorrect. Moving on to the next point. Which of the following reflects asset quality trend in the financial year 2024-25? GNPA ratio, that is gross non-performing asset ratio of scheduled commercial bank, has increased. No, it has decreased. It has decadal low, multi-decadal low. Retail loan segment maintain strong asset quality. This is true. Agriculture loans remained under stress. That is true. But they have recorded high NPAs. That is a bit dicey to say. High NPA is a wrong term. If they say they have remained under stress, then it's fine. But if I talk about the retail loans continue to have lowest NPAs, that is true. They have maintained strong asset quality, that is true. Credit card segment had the lowest NPA, no, it is retail loans. Corporate NPAs has increased beyond 10%, no. So answer to me is more convenient, more appropriate is B option. Moving to next, regarding the large borrower exposure, identify the correct statement. So, capital adequacy, sorry, regarding the large borrower, share of large borrower is in total credit decreased. Share of large borrower, regarding the large borrower exposure, identify the correct statement. Share of large borrower in total credit decreased, that is true. Their gross NPA ratio is higher than that of retail borrowers. RBI noted a decline in both share and stress, from large borrowers. This indicate de-risking of bank portfolio. So concentration of exposure has increased. No, number of large borrower account doubled. Large borrowers accounted less than 30% of the total NPA. No, so only statement which is correct in this discussion is A statement. Next, capital adequacy trend shows which of the following? It shows that scheduled commercial banks, they have average capital to risk weighted asset ratio greater than 16%. That is true. Common equity tier 1 capital fell below regulatory minimum. No. Public sector banks had lower capital ratios than private sector banks. No, they have higher. Capital buffer reduced due to rising defaults. No. Risk weighted assets declined steeply. Risk weighted assets declined steeply. No, I would not say that RW has declined a lot. Rather, RW has declined but not steeply. It is the decline of RWA with increase in capital, which has resulted in increase in overall ratio, which is capital upon RWA. RWA थोड़ा कम हुआ, risk capital थोड़ा बढ़ा, जिससे पूरी ratio ज़्यादा बढ़ गई. So answer is A option. Steeply RWA decrease नहीं हुआ, mind it. Match the liquidity indicator with financial year 2024-25 observations. Liquidity coverage ratio increased above 150% on average. That is true. SLR compliance improved across scheduled commercial banks. SLR compliance improved. So liquidity coverage ratio stayed strong, reflecting sound short-term liquidity position of scheduled commercial banks. That is true. SLR compliance improved across scheduled commercial banks. Okay. Net stable funding ratio fell below the threshold. No. Scheduled commercial bank faced severe short-term liquidity stress. No. Steeply का मतलब होगा बहुत तेजी से, बहुत ज्यादा, बहुत तेजी से और बहुत ज्यादा. तो ये दोनों ही नहीं है. इंटरबैंक लिक्विडिटी मिसमैच ग्रू. नो. सो यहाँ पे जो आंसर होगा मोस्ट एप्रोप्रिएट इज ए. इसके बारे में बात नहीं की गई अकॉर्डिंग टू मी in the report, so I'll go with only A option. Next question, what is the scope and outcome of macro test on scheduled commercial banks? 46 scheduled commercial bank covered, representing 98% of the asset. That is true. Test considered recapitalization plans. No. Worst case scenario showed major banks failure. No. CRAR projection dipped below 10% baseline. No. All tier 1 banks failed solvency threshold. No. So only A statement is correct. Rest all the statements are incorrect. What best describes the NBFC sector performance in financial year 2024-25? NBFC's upper layer faced higher liquidity vulnerability. So tier 1 So what best describes the NBFC sector performance? So NBFC upper layer faced higher liquidity vulnerability. That is true. They had higher exposure to the short-term liquidities, making them vulnerable to the liquidity forms. That is true. NPA rose sharply in housing finance. No. Second point is capital buffer declined sharply. No. Microfinance institute showed strong profitability. No. NBFCs, they outperformed. upper layer in growth? No. So answer is only A option. So answer is only A option. उर्मिला पहला पार्ट देखो, पार्ट वन में बहुत डिटेल में डिस्कस किया है मैंने व्हाट इज फाइनेंशियल स्टेबिलिटी. आपने पार्ट 3 देखा. सो देयर आर फोर पार्ट्स ऑफ दिस पर्टिकुलर सेशन. पार्ट 1, पार्ट 2, पार्ट 3, पार्ट 4. चारों को देखोगे आपको पता चल जाएगा. फॉर दैट मैटर इफ यू वांट आई कैन शो यू द way I have discussed it in the first session. In my first session of this particular report, I think उर्मिला आपने एफर्ट नहीं की. अगर आपने एफर्ट की होती तो यहाँ पे बहुत डिटेल में मैंने एक्सप्लेन किया पार्ट 1 में. देखो जरा, फाइनेंशियल स्टेबिलिटी रिपोर्ट क्या है, कैसे प्रिपेयर की जाती है, व्हाट एक्चुअली फाइनेंशियल स्टेबिलिटी इज, हाउ वी डिफाइन इट, ऑल दीज थिंग्स हैव बीन डिस्कस. तो जाइए पार्ट 1 देखिए. फिर भी अगर आपको ना मिले तो आप डाउट पूछिएगा जरूर. ठीक, चलिए. फाइनेंशियल स्टेबिलिटी अगर आपको अभी भी समझ नहीं आ रहा तो मैं आपको बताता हूँ. फाइनेंशियल स्टेबिलिटी का मतलब है हाउ स्ट्रॉन्ग the financial sector is going to be in the upcoming stress period. So whenever we check the current scenario, that how strong our financial sector is today, how strong it will be tomorrow, how it is going to perform during the uh, stress period, that is what is known as financial stability. So financial stability मैं बता ही देता हूँ आपको दोबारा फिर, वरना कुछ ना कुछ चेक करना पड़ेगा. सो इफ समवन आस्क यू व्हाट इज फाइनेंशियल स्टेबिलिटी, व्हाट विल बी your answer to this particular question, you need to answer your question in such a manner that whenever this question is asked or whenever this term is asked, what is financial stability, then your answer should be financial stability basically refers to the condition where the financial system, such as financial institutions, financial markets, financial infrastructure, they operate smoothly and they are capable to counter the shocks. They ensure the efficient allocation of resources and they have effective risk management so that they can support for economic growth. So financial stability means absence of any kind of systemic risk in the or systemic crisis in the financial institutions or market that can impact the economic activity. A stable financial system is one where the banks, the markets, payment systems, they continue to function even under stress. That is known as financial stability. It is important because it gives confidence in the financial system. It results in economic growth. It shows capacity to counter shocks and it shows the effectiveness of monetary and financial stability. Components are banks, NBFCs, financial market, payment systems, macroeconomic factors. Is it clear now? In this, we identify the stability against macroeconomic risk, market risk, global risk, banking sector risk, and even for that matter, cyber security risk. So this is what we call it as financial stability report. Sorry, financial stability in an economy. Got it, guys? If it is clear, just give me yes, sir, so that we can conclude the discussion. Don't worry, Sivananda, I will be coming up with one more session where I'll discuss the expected descriptive questions from financial stability report along with their sample answers. You have to wait for it. Thank you so much, guys. Good luck. Stay tuned. We'll catch you in the next session. Bye-bye. Take care. Good luck. God bless you all.